Hello and welcome to Crypto Weeklies. In this video, we are going to discuss stacks and its ticker STX. None of the content is financial advice. Right now, stacks has rallied quite a bit over the last 7 days or so, up about 42%. 46% over the last 7 days. Has been the second most rallying crypto over the last 24 hours as well. In terms of where the price is right now, is at around 35 cents. Again, it's a far cry away from the highs of 2021 and also in 2024 March, where the price was above $3.30. Now it's almost one tenth of that price. Has declined quite a bit over the course of 2024. The second rally in 2024 also did not make it to the highs. Again, it went to 0.786 fib level and then came crashing down, and 2025 was not that a great year for altcoins either. Most of the altcoins. So stacks has failed to rally above the 20-week simple moving average since December 2024, essentially being down only in 2025. Now the 20-week simple moving average is at around 44 cents, so about 9 cents between the current price and the 20-week simple moving average. Let's see what happens if there is a rally till that 20-week simple moving average, and if there is a breakout from there. Historically speaking, for 1 year or so, that level, the 20-week simple moving average, that is, was acting as a resistance. If there is a breakout this time, the secondary level to look for is the 50-week simple moving average, which is this blue line over here at around 63 cents. Again, these averages are not constant, so what is 63 cents today could be well at around 55 cents again 3 to 4 weeks into the future, because again they are all declining and going down with time, as price has not been above 50-week simple moving average since again late December 2024, so more than a year. The another key moving average, again, if you were to look in a longer term perspective, the 200-week simple moving average, the white line which turned blue around in 20 late 2023 till and stayed blue till about 2025 began. So entirety of 2024, the price was above the 200-week simple moving average. That was when stacks was in a bull run. Now since the year 2025 began, the price has came crashing down and again uh, taken the 200-week simple moving average along with it. The 200-week simple moving average is at around $1, and the 300-week simple moving average, this red line over here, is at around 99 cents. So those two levels again indicate that the price has significantly dropped, not just from the major moving average, the short term moving average, but also the longer term moving average are low. So can that warrant a accumulation zone for stacks? Again, our models that we have on CryptoWeeklies.com, link on the bottom of your screen. This is the linear regression based model. Again, this is the risk levels identified using, again, the polynomial regression based approach, a quadratic regression based fair value, which is a actually non-linear model, not the linear model as I mentioned earlier, which the fair value established is not does not have to go up with time or have a linear shape. It can have a polynomial shape where the fair value is dependent on the price action, and the continuous downtrend indicates that the fair value has gone down with time, whereas uptrend indicates the fair value has going up with time. The fair value per this model for stacks is at around 53 cents. And again, this model is a live model, so what is fair value today at around 53 cents could well be at around 40 cents or 60 cents, depends on what the price action does consistently over a course of weeks to months. So 53 cents, again, a key area of resistance. Usually when the price tries to break out of the from undervaluation to go slightly above the overvaluation, that area is filled with uncertainty. And in terms of 53 cents, where does it lie right now? Again, the 50-week simple moving average is at around 63 cents, but again, if we have to contend with that negative seasonality for a couple of more weeks or a month or so, the again, for context, the 50-week simple moving average in late November was at around 88 cents. Now it's at around 63 cents. So again, a month could again easily dampen that 50-week 50-week simple moving average around the fair value at around 53 cents. So that's one rally to look forward to. if that kind of price action is ahead of us. In terms of where we are, again, stacks on our website, again, in terms of time weighted average price, this blue line helps identify if the asset is in an accumulation phase, if the price is has gone down severely from the time weighted average price. For altcoins, what I have found useful is if the price is 50% lower than the time weighted average price, like it is now. The time weighted average price is at around 92 cents, but the price is more than 50% discount on the time weighted average price. That is lower than 46 cents. Over here, the price is right now 35 cents. So for this estimation, the price has has had a severe downtrend with respect to the time weighted average price, and this is again well established in our bottom indicator that we have launched, bear market bottom related indicator. And if we were to look it for stacks over here, the price is right now again lower than the time weighted average price as indicated. Again, there is some error on this chart. Again, we'll try to correct it. In terms of the in terms of the last analysis that we have for stacks is the 20-week simple moving average price based risk. This model again tries to identify what's the accumulation risk with respect to 20-week simple moving average. Again, if there is a significant downtrend on the 20-week simple moving average risk, again anything less than 0.2 risk could be a lot of noise in terms of whether it's actually a actually accumulation zone or just a major drop. But if you would like to only look at some of the historical bottoms, again you would find that most of them occur when the risk levels is between 0.1 and 0.2 and not 0.1. Again, in this blue color over here, that's because the initial drops in terms of the 20-week simple moving average are more pronounced. The risk levels goes down, there is one more counter trend rally, and then again there is subsequent drop. So that kind of a subsequent drop is still either again we are in this environment. Again, if this area over 2022 is similar to the 2025 drop, and then the blue shaded region over here is where we are currently at, this could be again a positive indicator of what the price of stacks is doing with respect to the 20-week simple moving average price risk is in a buy zone. So two models indicate that the price has bottomed. The time weighted average price model says again in terms of accumulation, not the actual bear market bottom, but for accumulation purposes, the time weighted average price model has signaled accumulation zone and also the 20-week simple moving average. What remains to be seen is if the price were to materially go down in terms of the this line over here, the regression based line. If the max pain for stacks on this per this model is at around 21 cents. Again, if it were to go to that level between 21 cents and 30 cents, which is about 10 to 15 cents lower than the current price, that could be a macro buy zone for stacks per this model as well. So 2 out of 3 say yes. The third model again, although has signaled low risk, again risk levels are only at 0.11, but usually at the bottom they are very close to 0.1 or 0.2. We haven't seen that kind of risk getting manifested anytime in 2024 or in 2025, so that remains to be seen. So with that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and check out all of these charts on CryptoWeeklies.com. Hope to see you again tomorrow. Thank you and have a nice day. Bye bye.